right. Everybody, good morning. Happy Monday to you. Hope everybody's having a good summer. Only half hour late of my roughly planned 9 a.m. London starting time. I have a few charts to share today. Hopefully you'll find them interesting. Update on Bitcoin, of course. But let's get right into it. Going to look at Apple. And what I want to show is a bunch of valuation multiples. Okay. I'm not going to go into a deep dive here. If anybody wants to ask me questions, please do. But I think what I'm striving for today on this stream is to look at basically how we can track fundamentals of a stock or Bitcoin versus the trend. And I think you can probably already gather my general feelings here, at least as far as trying to stay ahead of the curve a little bit, protect your family. I think trend following is better, easier, higher signal. But still, I'm not a swing trader or anything. When I'm showing you trends here, they're mathematical, formulaic based. They're not based on wicks on TradingView, drawing lines, and I know there's a lot of mathematical things you can do on TradingView for sure, Fibonacci sequences and all the rest, but I don't know. It's a bit much for me. So here we have Apple. If you remember from the last video, really until 2000, there's not much going on trend-wise, and there's not much going on fundamental-wise either. Of course, they're doing a lot of things, but, Jobs left the company somewhere here, came back somewhere here. And obviously, once the iPod and then the iPhone started up, they really kicked things off. But big drop here during the .com boom and bust. But split adjusted, relatively flat all through the 80s and the 90s. Okay. So first ratio I'm going to put on now, we're going to look at fundamentals, is the price to sales ratio. All right. So that's very simply the price or the market cap divided by either the revenue per share in Price's case or the total revenue in market cap's case. Doesn't matter which one you use, get the same multiple. All this is relative, okay? So no one knows exactly what anything should be for any company, but if you're going to compare things across industries, these can help. Price to sales will only work in the same industry. It will not work in this case, Apple's tech, roughly. It's not going to work in the automotive industry, okay? Price to sales. It's simply as I said, price divided by revenue. And all through the 90s, 80s, 90s here, except for this blip during the .com boom where it went up to 2x, market cap went up to 2x revenue. It's basically around 1x revenue. That is the market cap of Apple to the revenue. But watch what happens here after 2000. Zoom it out. Pretty wild. Now again, we could do trend lines on these bumps. Get very complicated, but basically what we can see here is the market cap of Apple has continued to rise relative to its sales. In traditional industries, at least when I was learning about finance, we didn't really extrapolate that number out. Usually it would still settle around some number, but it's interesting that Apple's has continued to rise. You know, 3 or 4 was pretty constant for over a decade, right here. But now it's up to 6 to 8. All right, just gonna run through these. Let me know if you have questions. Now, the other one that you hear most common for sure is the PE ratio. Okay, so we'll do this in 2 steps again. Let's go in the 80s and the 90s. I'm gonna take off PSRs, these one at a time. So PE is coming up. PE is a bit more volatile in certain cases. Either when the price is too low or the earnings are either negative or too high, you can kind of crazy multiples. So I'm just cutting it off. It is what it is. I'm just I'm just trying to deal with it. I haven't dug into why this multiple is so crazy, but interestingly here, even when the price is split adjusted pretty low in the late 90s, apparently that was even too high. Okay, again, that means very, very low net earnings, or even negative at times. I also took off negative numbers because it does go negative a few quarters. I'm just cleaning the data a little bit. Fundamentals really don't help you here with Apple. While Jobs was on his break working at Pixar. But when we go back to the 2000s, 90s and the 2000s, we can start to see a trend again. So let's just go here. Still, we have some numbers. I'm capping over 60 PE. Some periods. But generally, we looked at the Schiller long-term S&P index. 15 is typically a multiple that you talk about. That's roughly, again, if you're just completely new to this, it means that the earnings of the company will take 15 years, or in this case, from 2011, based on the prior year. This is prior year, always trailing 12 months number. So based on the from November 2010 to November 2011 earnings, it would take 10 years of earnings, that is net income, to make up the stock price. If it's high, it can be overvalued. But again, here's where PE runs into problems, is it was pretty high here before the GFC. Okay, but if we zoom in on the price exactly here, price was still, going up. Price had more to run. Then, of course, another big dip after the GFC. But let's just zoom in again just to here, take out some of the noise. Now it's going back up again, so theoretically a little overvalued at 30x. Wasn't even close to 40x in January 2025. Theoretically overvalued. Again, I'm not making judgments here. I don't necessarily follow. I definitely don't follow these for stocks that I do hold. And generally, I think over the long term, if you want to look at your profits and how things run, I don't think it's that helpful, to be honest, because so much can happen. These are all based on just quarterly numbers. They're 10Ks that they publish. All public companies publish in the U.S., that is. It's not anything magical, but it can give us some fundamental metrics. It's not the best one, though, PE. Primarily, it's not the best is because the denominator, all right, price, again, is the numerator or market cap. The denominator is either earnings per share or net income on the income statement. Income statement is not great, though, because income statement is more of an opinion, less of a fact. Good morning, Lucas. Hello. So I like operating cash flow ratio is another one, because, as they say, cash flow is a fact, not an opinion. So on the cash flow statement, which just balances, it ties your cash balances quarter to quarter, you'll see how much was made in three categories of cash. The first one is investing. The second one is financing, really financing, then investing. And the third one is operations. Okay, so as far as financing goes, that's if you're raising money for making investments. And then with investments, usually you're spending money to make investments, so it goes down. Those two typically cancel out. Doesn't always, but typically. So you're raising money either with new stock or with debt, spending the money, investing it into the business. Like I said, those two cancel out. Then the third was operations. So you're strictly looking at the operational cash that goes through the tills and how much is that. So I think that's a little bit better generally. So let's put that up relative to the PE ratio. Okay, see, it's very, very similar, but perhaps took out a little bit of noise in this example. Again, I'm not a huge fan of all this. I'll show you why in a second here. But roughly, this could take out some noise of a high PE ratio, which would suggest overvaluation here in the mid 2000s. You know, they were running at a 20 times their net cash flow on operations. Still fairly high, roughly, but you know, perhaps if you looked at that number, you would thought it was a more manageable investment. And by the way, these are split adjusted numbers, remember? So every time they do splits, you know, you're doubling the amount of shares you hold. But then if you look back in time, you got to adjust the price. So price will look different here than it would at the time. But still, split adjusted 42 cents. Seems pretty great compared to the price now, which is, you know, $210. Obviously, Apple is a blue chip stock, but again, this sort of crescendoing up here to a higher multiple, both in the PE and the OCF ratio, operating cash flow ratio, suggest the stock is running a little bit hot. But again, compared to the trend, I think it is less helpful to look at this stuff. So there's that. Last one to look at is the EV versus EBITDA ratio. All right, so I'm going to take this off again. Let's zoom it out. Let's go back to the 90s, 2000s. EV is enterprise value. It's roughly supposed to be the market value of the company versus the book value. Book value would just be total assets, but so market value is not market cap, actually. Market cap is the value of the equity. It's just price times common stock outstanding. Enterprise value is a slightly different calculation. You would add market cap, then you would add any preferred shares, which are locked up basically, insider shares. Different ways to value that. I'm not going into that in this video. Add up the debt, okay, because now you're adding up the equity and the debt side of the balance sheet, and then subtract out the cash on the asset side, okay, just to get rid of any sort of excess cash that wouldn't be included in the valuation, but it would be reflected in the liability side because, again, cash is an asset. Debt and equity are on the right side of the balance sheet. Assets are on the left side of the balance sheet. So the point is, when you run that calculation, you get to enterprise value, which is supposed to be a little bit of a better ratio to compare with some of these things, particularly EBITDA, which is on the net income side again, and that's before taxes, earnings, depreciation. This is very analogous to the cap rate in real estate. It's like the inverse of a cap rate. Again, a bit crazy here in the 90s. So sometimes these fundamentals just don't work. They can be negative. They can be way high. I'm just cutting them off, trying to clean it. So 80s and 90s, not great. And then let's look out here. So here's the EBITDA. Let's put this versus the operating cash flow ratio, which is on the market cap, but still, you know, you see a little bit different opinions on the valuations. Both of them are reflective of the operations. It's just, in some sense, it's two different ways to look at it. The EV and EBITDA ratio is more supposed to be encompassing of the entire business. The operating cash flow and the market cap is just looking at the straight cash that comes out. You could also do EV on operating cash flow as well. I just didn't want to put too many different multiples on here. It gets confusing, but anyway. So what you have net is 4 different ways to run multiples. But if you really look at it over the long term, I think, yeah, great buys here. Split adjusted $10, $13, and it would show you it's relatively low. First of all, relative to the past. So post GFC, Apple price looks all good here, all through the 2010s. But now it's running a little bit hot. So we put on the PE ratio, put on the PSR, which is going to give you a different way, but it's kind of a different level of things. So if you zoom in, you can see they're all running a little bit higher relative to the past. But if you think about when you actually become pregnant with an investment, so to speak, when you actually take the dive, when you buy the stock, it's could be quite arbitrary to sell based on these metrics, right? Because you could think that Apple's like super overvalued, but then the market, as Keynes says, can remain irrational for longer than you have capital, basically. So maybe the PE ratio doubles from here, and it gets more expensive from here. So one would be quite sad if they sold early. And I think that this reflects totally the same with Bitcoin, which I'll show you in a second. So the point is, long term with Apple, obviously you look at 2 different phases here, like pre-Steve Jobs' return in the 80s and the 90s. Okay, it was, obviously a different world there, a different world of money printing. I don't have dividends here. They do pay dividends, right? Someone let me know for sure. I'm pretty sure they have over the years, but you go sideways here for 10, 20 years, some action around the .com. Fundamentals don't really help you in this case. All right. And then here, fundamentals don't really help you either, other than maybe give you some Malox moments. Now that we're going back to all-time, where we all are at all-time highs or close to them with Apple. Shouldn't say we are. Obviously, we were at the start of the year. But we're close to coming back to these numbers, right? 30 to 40 in the PE, which really even weren't suggesting all-time highs on the price, which is funny, right? Price pre-GFC was topped out here, January 2006. There we go. Sorry, here, 2008. 7 PE was only 37. So the fundamentals are not, they're very helpful to relatively value companies, I think, but they're not necessarily helpful, especially once you're in the investment and once you sort of want to figure out what's going on. I think then a much more helpful route is to look at the trend. All right, so go back to this chart. And even here, I'll come back probably tomorrow with another chart from this. Even here, as I mentioned, Jim Simons from Renaissance, rest in peace, who was a great quant physicist, became a trader, really was basically just using this applied statistics to run the price. So here's the all-time trend, right, of Apple. It's exponential, straight line on log scale. But even here we can do some work, right? So remember, we have these 2 long-term periods, right? Basically the first period is pretty choppy. a lot of sideways action for a while. This is log scale, by the way. All right, so it's a little bit different than the other chart was linear. But then pretty much from here, since this even kisses the trend, from the 2000 top, let's say, till now, I think we're on a completely different trend. Yes, we had a big dip here, unfairly cheap. If you bought Apple here in the early 2000s. But if we, so this is the all-time trend, the black line. But if we look at how that exponential trend line evolved, that would also tell us a different picture. So let's look at the 10th and the 90th. This is how it evolved. It was much flatter trend line in the 80s and 90s. And I think basically from here to do a Jim Simons type of analysis, which again, I'm nowhere close to his level and just looking at things, trying to do it simple. Probably a good way to start a trend line for the Apple stock price would be right about here, where we can see the Apple trend line forms a nice channel. That is at the time, which is going to be different than the all-time trend line, which is actually flatter. See that? The black line is flatter. So predicting out that in the future, I would not want to use the all-time, because you can even see how these kinks, see how like right here, we're at a certain height. It's about 22% per year, or 23, I don't know. And then here it flattens a little bit, just slightly, not much percentage-wise, but you can see that when you start to project out, you just go a little bit flatter because I'm working on the all-time trend. So what I'll try to do tomorrow is update this still, where we can see a better trend line for how Apple goes. And then once you're in the investment, I think that's where you just sort of let it ride, in my opinion. Nothing wrong with the Apple company at the moment. It'll be easier to describe what I'm talking about tomorrow, but I'll start the trend line basically here. We can see clearly that this is set a trend, a long-term trend, and then from there we'll judge the bands. But here, right, this period from the 80s and 90s when Jobs was there, then he left, then he came back, it just has a different trend. So I think it's less helpful. And if you try to run an all-time trend, again, you get that sort of, you see how it's elevated here, evolving, but then it goes flatter because it's taking all the data from the 80s and 90s, which is flatter, and gives us something that's probably not even a best way to predict out into the future. So my point is, fundamentals are good. They give you some valuation tips about how a stock might be over or undervalued for the buy. But for the sell, I think it's very difficult with fundamentals. You know, really fundamentals don't tell us at all if, like, here would have been great catch to catch it cheap. But then you might have thought, okay, here, fundamentals really high right before silly season started in March 2020. So maybe you even somehow timed it here, heard about the bad news of everything around the world, and you sold. But then maybe you bought here, March 2020, and then sold again when it got to the top, right? The prior top. That would obviously been a mistake, because the PE went from 24 all the way to, you know, did it hit 40? 39. So I think fundamental analysis is interesting, but it's kind of just a guide. So if we can apply that to Bitcoin, and there's a good quote, actually. I know I've told you guys I'm trying to be the anti-newsletter, video newsletter type service. Not really interested in sending newsletters out or charging subscriptions. You can always donate to my BTC Pay server on my site or on Twitter. But I do remember this quote. It's pretty good, from newsletter extraordinaire fella, Stansberry Research. And he was interviewing a trend trader. And he's like, you know, it just seems we do all this work for our subscribers and everything, putting these valuation metrics together, which is here. Okay. Which, by the way, this is the best You're not going to find any newsletter that's going to give you such nice interactive charts. There you go. Shameless plug on these valuation metrics. But, he was asking a trend follower. He's like, we do all this work for our subscribers. And then you come in without even thinking about the fundamentals, how the company's doing, how the revenue multiples, the operating cash flow multiples. You're just seeing where the price is to start, and then you're looking at some moving averages. It just seems like you're kind of cheating. Use that word. It's like, it just seems like you're kind of cheating. And it's an interesting perspective. But if you're talking about just, being a passive investor or even an active investor, I think he was probably right. I think you can get ahead. You can cheat a little bit more with technical analysis than fundamental analysis. So this is fundamental analysis. Like I said, it's helpful, but it's very difficult. I think it's very difficult to call tops. For example, even here, look, just based on the fundamentals, this was a very high PE here, September 2020, after we just talked about, you had probably sold here, not you, but you could have sold back here, right? After this big dip, then went up, time to sell right here when it gets back to this level, right? 23 goes way up. And then the economics of Apple can become better cash flow. So the multiple actually comes down, but the price is still going up. So it's very hard to time exits with fundamentals, in my opinion. And the same would be for Bitcoin. So with Bitcoin, there's one fundamental that works with Bitcoin, at least that I've found so far. Bitcoin does have a price to sales ratio. I don't know why people don't record this on their, Masari doesn't do it, or Coinmetrics, or I've talked to Nick Carter about this a lot, but they don't have it. This is one of the ones I've had out since the start of my website in 2017. This multiple, the PSR, which I have for Apple, right, which is very simply the market cap divided by the revenue of the company. You can do this for Bitcoin. You can do this for the Bitcoin system. Now, like I said, these are not comparable multiples, okay? Because in the tech world of Apple, this multiple right here. PEs are comparable, by the way, across companies. PEs are comparable because it's after expenses. Price to sales, all right, which is simply market cap divided by that revenue number on an annualized basis. And mine is actually trailing 12 months. There's a difference between annualized and trailing 12 months. Annualized could be where you just take the quarterly revenue and multiply it by 4. I'm not doing that. I'm taking trailing 12 month and actually doing it even a little bit more refined than that. That's why, because I'm getting it down to daily. Don't worry about it. The PSR here is not comparable to, say, the auto industry. And it's certainly not comparable to Bitcoin because PSRs are before expenses. So we have no idea what the capital structure of the company does, the expense structure, the cost structure, to work itself out into a PE when we look at the PSR. It's a very simple metric. So it can help us, again, maybe here, if you were just looking at this as a snapshot in 2007, a year before the crisis fully took effect, it'd be pretty good to be cautious about buying more Apple stock. Or when it crashed and we went down to 666 on the S&P in March 2009, you would want to buy more Apple stock. But again, when you get closer and like we're in the same position, right? Like we could be in the same position as here. We could have another crisis, or this goes down, or this could double. Honestly, I do not know. It's impossible to tell from fundamentals, in my opinion. So that's PSR. But look, with Bitcoin, we can do this too. Bitcoin, the beautiful thing about it so far is it's much more cyclical than stocks. Also moves in a power curve, so it's different. So here, let me take out the multiples. This is very, on log scale, the revenue looks much bigger than it is, but look at the numbers in the tooltip, just to show you. Market cap, all right, market cap 2.3 trillion. Actually, this one stopped as of yesterday. That stops as of yesterday. 2.3 trillion market cap. The trailing 12-month revenue in miners, if they took their coins, their fees every day over the last 365 days and sold them into dollars, would only amount to less than $15 billion. That's a huge difference. 2.3 trillion on the value of the network versus 14.8 on the miner revenue. So if you run that calculation, you'll get this price to sales ratio. It's the same thing as what I just did with Apple. It's the same calculation. But with Bitcoin, you actually see some really nice peaks that signify some tops. So this is, in this case, it does look a little bit more helpful, more regular, as many things with Bitcoin do. All right, so again, time to buy when this is very low. Time to sell when this is very high. Topping it is obviously impossible for most people, and I'm not recommending that either, but this is how it works. This is how the Bitcoin system works. Another reason why I don't think hyper-Bitcoinization is around the corner anytime soon. Notice how it topped here in the first top in 2021, not the second. All right. We had a double top in 2021, right? So it topped here, not here. Then if we look at the 2 and the 98th percentiles, all right, on the right, put it in log scale, you see it looks a little bit better actually on log scale on the right axis. We get this nice ping pong effect where we're going from overvalued to undervalued to sort of back, undervalued again, overvalued, back down to undervalued. FTX puking. Now we're making our way back up. Interesting that this is most analogous to the crypto winter, as they called it, the 2014, 13, 14, really 14, 15, 16 bear. Not fully out of that until 2017. So we've been building up here, built up from basically the start of January 2015, which really meant stuff was even going bad for the year before that because it's going down to it. Right, and so here was June 2022 was the top. So if we topped in basically January of 2018, just round figures here, that was 3 full years. 3 full years for the cycle. Here, if we bottomed in June 2022, 3 full years for this cycle. Interesting. We've already passed June 2025. So a slow build up, just like we had here. But again, catching the top on this multiple has proven it's easier than Apple, but it's still, you got to be careful. Which is why, to culminate on everything I've been talking about here, here's the trend line itself. Here's the trend line itself. So same multiple, but I'm just putting the trend line in the middle now. A little bit above trend, but not close to the top, which we have hit in every prior cycle here, the 98th percentile on my metric. We have kissed it. Doesn't mean we'll kiss it again this time, but it's an interesting way to look at it. But bottom line, like with stocks, Bitcoin as well, I think is much better to look at an analysis of where we are in the cycle with these percentile bands. Okay. So in Bitcoin's case, we have a power trend, which is this concave down on log scale. In Apple's case, and every other stock in the world, except maybe MicroStrategy, I'll get to that in a future video. it's an exponential trend. The exponential might be shallower or steeper, right, as it was in the 80s and 90s, shallower and then steeper from the 2000s. It might not be a great trend throughout the decades, so then you gotta work through the numbers a little bit. I would still say mathematically, I'm not a fan of lines on charts, right? I'm a fan of mathematics. These are just mathematical calculations. So I would probably redraw this, and I will do it for you in the future. I would imagine Jim Simons would say this is a better trend to look at. It's clearly a trend has set in here from about 2004. So that's where I would start it. Anyway, let's do it with Bitcoin. All right, so we have the PSR. We can do a fundamental analysis with Bitcoin. But at the end of the day, trendline analysis, I think, is the best. And with trendline analysis, current price, we're at the 70th percentile. And that's where we are. So let's build it out. Again, it was more volatile back in the day. That's why we get this sort of evolving way higher, because the trend line was higher at the time. But as I've said many times, this is such an amazing trend for Bitcoin that since about 2016, it's been nearly kissing the all-time curve. You cannot say that for Apple. For Apple, as I've said, the all-time trend, I need more lines here to fully show you what I'm trying to say, but the all-time trend, it's here, right? If you see how it's parallel, looks good here, but it's really, you wouldn't even want to look at the data here from the 80s and the 90s. According to the way that the price is growing now, that you only really want to look from here. So again, that's my rough opinion of how it goes. And then I'd have to redraw the trend line, like I said, with all the bands. So you'd get a black line that would be nice right in between these two lines. But at the moment, this black line with the 90% R squared is going all the way back to the start of the data. So again, different ways to look at it, but Bitcoin here looks great all the way back to the beginning of the data. This all-time trend still looks amazing. Still catches the data very well. It's clearly a power curve. No matter what anybody tells you, Bitcoin is not an exponential asset. It's growing in power, just like cities do, just like certain organisms do, including humans. We grow in power. Okay, it's a more sustainable growth. Now that we know where the price is currently at, all right, how do the rest of the bands look on the way up to the top? All right, not even going to show the lower bands. Well, I'll show one. Let's say the 10th percentile. Okay, we're pretty far away from the 10th percentile. All right, we hit it a little bit here. Didn't quite hit it, but we're close. The FTX debacle and all the rest, Celsius. Hit it here in the crypto winter. Not close to it. But now let's try to see the fun part, see where we can go on the upside. All right, so again, let's look at the 80th percentile, 90th, and I'll stop there because I have another chart, which, as you've seen, was more detail still. So now let's look through the past booms and see where, if we hit it, surely we did. 2011, we're well above the 90th. Let's take off the 10th. All right. And here's where I'll tell you about the multiples again. I like using multiples. So this is a little bit different than my friends Plan C and Cena. If you look at their percentile quantile regression, that will be a nice smooth percentile all the way back in the past. Mine doesn't do that because I want to keep the multiples fixed on what the trend line was at the time. A little bit different. So basically, at the time, Bitcoin, look at these 1.1 to 1.3 to 2. Bitcoin easily got to 2x the trend in 2011, twice in 2013, in 2017, easily 2x the trend. That's number 9. All right, the trend at the time was not this. This is the all-time trend, so I'm going to take it off. I should put the evolving trend on, but forget sometimes after I'm live. The trend at the time was 3,250, roughly 260. All right. The 90th percentile would be 2x that. All right. So 6,520. The price was 17,000. I think the top was actually December 16th. 17th, 16th, 16th. Got up to 20,000 on certain exchanges. So easily cleared the 90. Here, a little bit harder, but we did clear the 90 in 2021. And now, where are we relative to the 90? Not close. So again, for all the noise, for all the crazy takes on Twitter or TikTok or wherever, all the YouTube videos where someone's going to tell you Bitcoin's going to zero, Bitcoin's going to $1 billion. These are the raw statistics. Okay, so having looked through all the past, we can see it clearly got above the 90th percentile. So now, if we want to look out to the future, let's look at the 90th percentile. This is only the 90th percentile and above. This little rainbow here. All right. And the 100th, just to be clear, is a very rough one to hit. We did hit it actually twice here, once in 2011, once in 2013. I'm not sure which one is actually painted because it's only going to paint one. Unless they were literally exactly the same number, but it wouldn't be. But roughly, you see the 100th percentile here, 7.8x. So 7.8x the trend at the time, which is not this. This is the all-time trend. This is all the data, including today's. The trend was faster here. It was more parallel to these lines. A little bit slower here, but faster again here. We're not going to hit this. All right. This 100th hasn't been hit since 2013. We didn't hit it in 2017. We didn't come close to hitting it in 2021. We're not going to hit it this time. I can even go out on the record and say impossible. If I'm wrong, I'll be super happy to be wrong. But it's just statistics. It's not going to happen. So I'm going to take off the 100th. All right, you see it was a big gap between even the 100th and the 99th. We did hit the 99th in 2017. Of course, we hit it in prior years. We did not hit it in 2021. All right, so the 99th is 4.6x the trend. So the trend at the time, if the 99th percentile was 98,000, all right, divided by 4.6, roughly 21.3. 21.4. 21,400 was the trend at the time in 2021. Trend goes fast. Think about it. What's the trend line now? The all-time trend. Right? What's the trend line now? 107,000. So we're already 4x what it was in 2021. Remember, the trend roughly doubles every 2 years at the moment, but that rate of increase will decline for Bitcoin because it's a power curve. It just looks different than stocks and bonds and everything else. But to prepare ourselves to think about the mania that probably will come at the end of this year into next year, I would say look at the prior cycles. All right, so we did hit the 99th in all prior cycles, but not in 2021. So I'm going to take 99th off, take 98th off, and I'm going to take 97th off. Right, so we have this yellow. You can barely sort of see it, but there's a yellow band there is the 96th. What's the 96th percentile over the trend at any given time? It's one fixed number, 2.8x. 2.8x, all right? So again, as I said, the trend was roughly 21,000 here in 2021. 2.8x that was what the price was. Sorry, 2.8x was what the price was. Roughly 55,000. See that? The price is here, number 6, which is a very faint yellow line. It's just rising above it in the spring of 2021. It does not even hit it. It was a confusing bull, right? It does not even hit it in the fall of 2021. But here we have a much more stable, sustainable, stronger, for longer rise. Much more like the 2017, in fact. So maybe we will have a blow off top like that. Maybe we'll have a double top. I have no idea. Anybody that tells you they know does not know. What I can show you are the statistical results for free. Better than any newsletter. Please donate if you can on my BTC Pay. So yeah, that's really what I wanted to talk about. It turned into a lecture. I'm sorry if anybody wants to chat or has any questions. Started out with fundamentals on Apple, finished with technical but really mathematical analysis on Bitcoin. And again, you got to do what you got to do. It's not financial advice, but if, whoops, sorry, that's the 100th. This is the top 10. You know, if you ever want to think about selling some Bitcoin for dollars or euros or yen or whatever, the easiest way to do that, other than if you have the immediate need, but if you don't have the immediate need, but you think maybe the markets are a little bit out of whack, it's much easier to do that with this sort of a percentile analysis than fundamental. Because fundamental, like I said, with Apple could double. Fundamentals can get even crazier fundamentals, basically. They're just multiples. Hello, Samuel. Can you be a bit more specific, risk metric with the power curve? I would say, I mean, this is a measurement of relative risk. You know, 2/3 of the time, the price is even under the trend, right? So 2/3 of the time is, well, here we go. So these are the ones that are the percentiles around the trend at the moment. Okay. You see that the trend itself is between the 60th and the 70th percentile. So between 0.9x the trend and 1.1x the trend actually occurs, let's just call it 65% of the time. Let's call it 2/3 of the time. So what that means is 2/3 of the time, the price is below this black line. Statistically, no anomalies, no nothing. That's just straight up the number. You don't have to do any standard deviations. This is literally percentile analysis. So the fact that we right now, with a Bitcoin price of $119,000 per Bitcoin, we are above or right at the 70th percentile. So we're already above that 2/3. And we're getting close to perhaps a blowout, which would be riskier, you know, less frequent. So if that's kind of what you mean by the question, I think this chart can tell you that. If you mean another sort of risk, like, I don't know, like how fast that could happen, or it can happen fast. Okay. Like here is, where are my days? No, here. So here's how fast it happens. These mountains that just count linearly, right? Counts days above the 90th. So you see when we have these mountains, when the price really moves above it, it's really 2 to 3 months. 2 to 3 months. Okay. Here we go up to, it can also reset if it moves out of the 90th, but if you kind of add them up even, 84 days plus another 33 days, 2 to 3, max 4 months. We're above the 90th percentile. We are not there yet. There is no mountain even growing on this chart. So we're not there. We could go down again for sure, but we're not there yet. I'll stick with you for a second, Samuel. Hello, D-Max. I see. Yeah, Google search, Reddit posts or whatever. I'll see if I can get those easily, but I don't have anything like that at the moment. But surely some people are posting that stuff. That's good. Yeah. Thank you, D-Max. This is what I want to do. So I'm finally getting into my APIs and my models. I'm finally getting stock data. Like I had pricing data, but really this fundamental data to draw you these, these nice multiples, which I said don't necessarily mean much in a bull market. What I want to do is, MSTR, MicroStrategy, will be the first for sure because they have huge stock of Bitcoins, whatever it is, 600,000 plus. And my big question, which I have still not really heard anybody provide an answer, I put it out to some of the Power Law crew, is, what happens when Bitcoin becomes super ubiquitous and we get to this Bitcoin standard, which again, in my opinion, is not going to be a hyper Bitcoinization event. I think it's going to be slowly, then suddenly is okay to say, but it's not going to be, come on, I'm drawing this chart here. It's not going to be overnight. This chart is changed something again. So this is again why I don't host live. One second. I'll show you. But it's a good question, and I think it's important, and I think it's very interesting because what Saylor has done is basically forced everybody to think about these two different types of a curve. And I don't think Saylor himself thought about it a lot. If you go back to some of his early shows, like I remember he was talking to my buddy Peter McCormick on, when he was first coming out as a Bitcoin bull in 2020. Price was around 10,000 and he was buying loads of it. Saylor is using TradFi to buy future money, all right? And using TradFi, it's an exponential curve, all right? It's just different than Bitcoin. So I'll show you again what I mean. This is not Apple. If I did Apple, it'd be Bitcoin actually wouldn't catch it in market cap. This is the total monetary base, which is another research set that I do. Remember it's global money, gold, silver, central bank money all together. By this projection, I think BTC will catch, again, why I don't see anything like a hyper Bitcoinization coming. BTC I think will catch it in the year 2043. Early 2040s. Right? Could be late 2030s, whatever. But since Bitcoin grows in this nice, beautiful, sustainable power curve, and since the rest of the world in TradFi, including stocks, bonds, doesn't matter, government debt, it is always going to be on this straight line on log scale. You come to this simple geometric problem in that they can't continue together like this forever, right? Because if you understand simple geometry, obviously, if they're two parallel lines, like they can grow together. And that's been the case with gold, silver, whatever. They're all just parallel to each other, you know? Some grow a little bit faster, some slower, but they're still parallel exponential lines, straight lines on log scale. Here, if one is curving and one is straight, you know that at some point, even though BTC flips TradFi here, TradFi is going to go back and flip BTC in the future. That won't happen if A, BTC forces TradFi into this Bitcoin power curve, which I think that's what all the BTC maxis would prefer. And I think it would be great too, frankly. Or B, which could still be good for Bitcoin, BTC goes exponential and starts moving into TradFi. And since Saylor, since the beginning, was always talking about how Bitcoin is going to be a great asset to store value, and you know what, if you want some liquidity in the future, just take out a line of credit. He said that from the very beginning. He still says it. Lines of credit are exponential instruments. They're just like everything else. They're debt. So you're going to have to pay a little bit of an interest. You can't have these lines go together. You can't have these lines work like this forever. It just won't. It won't work. One has to form to the other. So that's what I'm trying to figure out. And what is very interesting is, and you can see Sminston with see his work. He's been modeling to a very detailed, like, statistical programs, which I don't use. I like to just do the simple regression and that's it. It seems that if you did a trend line over MSTR, and remember, MSTR is whatever it is, 25-year-old company as well, longer. He started in the early 90s, 35 years, whatever. MSTR would have a straight line regression like this. But since 2020, if you just start the regression there, it seems like it's bending. It's turning into a power curve, which is very, very interesting because no stocks look like that. All stocks in the world, you can't find me one stock, does not look like this over the long term, straight line. Even if, like I just said with Apple, you can have a very flat, sort of slow growth straight line for 20 years, and then all of a sudden a faster straight line for 20 years. You could still draw an overarching straight line for 40 years or 50 years or whatever it is. That's the stock market. Stock market moves exponentially. Everything in markets moves exponentially. My opinion is because of compound interest. It's just, that's how everybody raises money. You raise money with debt. Primarily, debt is the bigger portion of the capital stack than equity. You have to pay interest on that debt. That's an exponential function. You can't really get around it. No one has grown differently in the markets. It's a very subtle point, which I think a lot of people don't even understand, but that's the way it works. Bitcoin does not grow that way. Bitcoin grows with this beautiful, sustainable power curve. So I continue to beg the question, what happens to a country like what happens to a company like MicroStrategy, or countries? I guess we've just heard the U.S. doesn't have as much Bitcoin as we thought, right? We heard that last week. When they start to hold more Bitcoin, how is their national debt going to look? That's the real change. The real change mathematically is either everything else moves to power, or Bitcoin, which is powered, moves to exponential, moves to everything else. I think Bitcoin can work in both scenarios, but it's actually more sustainable. It's better if everything else moves to power. that'd be very interesting to, it's interesting to hypothesize. I wouldn't put it like that. I would say, I think if Bitcoin becomes exponential, fiat can move along exponential just like it. Right? So back to, where did I have it? People all, like, if I draw these long scale charts for a reason. People think they're crazy. Like, how can you project out 100 years in advance? That's fine. Of course, I have no idea, what's really going to happen. I'm just doing the trend. It's a mathematical. It's not a trading view line on the chart based on the wick. It's actual math. But people say, like, here, all right, 2043. You think that there's going to be 150 trillion dollars in fiat money? Like, that's just impossible. Well, look at what already happened since the birth of Bitcoin. I mean, gold, silver, fiat is now 45 trillion, roughly. At the start of Bitcoin, it was only 10. It's already 4.5x. It's exponential growth. It's not, there's nothing stopping it from doing it more. I mean, you could have 50 currencies die in the meantime. There's nothing stopping, the hegemon has a lot of guns. They can force us to use their dollars for a long time. There's nothing stopping this trend to continue. What is very interesting is Bitcoin does not move on that trend. And that's my query. That's my question. I'm not saying it's bad for Bitcoin either way. I think Bitcoin will be fine either way. But probably, what would be better is if we move into this sort of gently sloping curve that follows Bitcoin. The question that comes up, though, which you have to answer, is like, how would that work with someone like even a Saylor example? If you're going to take out an exponential line of credit against your Bitcoin, to pay off that interest on that loan, you need either exponential salary growth, which is fine. That's how stuff grows, right? Everything grows exponential. You need exponential salary growth. You need exponential growth in your business. You need exponential growth in whatever. But how would that work in a monetary world where there's less and less sats to go around, less and less Bitcoin to go around? You can't square it. It's very interesting, in my opinion. This is really the brass tacks of what, not hyper Bitcoinization, because again, I don't really see that happening, but what a Bitcoin standard looks like mathematically. Anyway, more questions than answers here. Again, in the meantime, there's another thing I think is funny, right? Like, so again, trying to give you a lot of my financial education, not all of it, but a lot of it came through reading newsletters. Pay these guys some money. Sometimes you make some money on their stock picks. Sometimes you lose. I feel like more often than not I lost, but it could just be me. And the funny thing about newsletters, especially stock picking financial newsletters, is there's only about 1 or 2 pages in the report which are hard statistics, either saying, a hard recommendation to buy or sell, which again, it's free. It's a free speech issue, by the way. They take no responsibility, as I take no responsibility if something happens, right? It's just free speech. They're telling you you could do this or not. But a few pages of recommending a stock, buy or sell. They might show you when the recommendation was to buy it, what the performance has been since then, depending on how advanced these newsletters are. Usually, they used to be very I was buying them with PDFs and email, so it'd be pretty, not very up to date often. But then, like, for 70% of the newsletter, they're just droning on about how the world is going to end and gold is going to save everybody. Usually these newsletter guys are gold bugs. Now there's a lot of Bitcoin bugs on newsletters. There's a few things to point out there. Firstly, the gold bugs have been way wrong. Let me show you a Peter Schiff. Mood destroying chart. Because even though gold is rising, and it's very, very good right now, gold is like so boring compared to what happens with Bitcoin. All right. It's from 1971, log scale, straight line. All right. Again, same concept as Apple. All right. Remember the Apple chart. It's exponential. You can read, some of these guys write newsletters for 50 years saying the world is going to end. It's all fiat. Is going to blow up. It's terrible. I'm trying to prepare you. If you're not so familiar with this, you're new to Bitcoin. You might be let down if you're looking for the quick buck and also the hyper Bitcoinization solution. These people for 50 years have been saying that gold, is going to explode and we're going back to a gold standard. It's pretty high now, finally. All right, here we go. This isn't even, this chart's only ending first quarter, March 2025. I think we're about the same price, roughly 3,000 in gold or something. Let me check. Sorry. 3,300. A little bit higher than this. But notice again how these exponential curves can change. Gold was on a downward trajectory exponential from 1980 to 2000. And then now, really fast. Really what you can see here is 3 different trends for gold. 4. You can say one was 1971 to 1980. Then 1980 to 2000. Clearly see that channel here. And 2000 to 2010. So 10-year run, 2011. And even from 2011, it's just sideways. This is the trend that has been intact, roughly. So if I were doing a Jim Simons type analysis, I imagine my overarching base case model would be like the trailing 10-year trend. And then I'd probably look at days and weeks and whatever fancy stuff those quants do. Yes, I know Bitcoin is infinitely better than gold. It's 1,000 times better than gold. The gold bugs have lost the plot. There's a risk to storing gold, to securing gold. There's cost to doing it, paying for the big doors, paying for security. Bitcoin is a totally different security model, cost structure model. My point is, this can run a lot longer than we think. And until then, I would just stick with this, right? This is the best trend line that you'll ever see. In the modern era, I've been tracking a lot of trends for a lot of assets. Like, this is the best trend line since fiat started in 55 years. There's just nothing better than this. Doesn't mean we can't go exponential or hyper Bitcoinization. But in my opinion, that is about a 0.1% chance. All right, even getting to here, which is 7.8x the power trend, has not happened since 2013. All right, what's 7.8x the power trend moving out to the end of the year? It's $1 million. a Bitcoin. I don't see it. Not this cycle. But the 90th, much more reasonable. All right. What's the difference between the 90th and the 100th? $750,000. Another one from Samuel. I think there are some good companies, decentralized, by the way. Debify with the hodl guys. Max from hodl is running Debify, and there you can, in a very decentralized manner, post your Bitcoin as collateral and then get loans for sure in stable coins. I'm not sure, maybe even in dollars or euros. The problem with that so far, my view, I'm not playing in that market, is the interest rate is quite high. It's not exactly a Saylor line of credit idea. So what Saylor was, and Saylor is able to do it, obviously, with his liquid stock company for 30 plus years. They have cash flow. He's able to make those instruments and sell them into the market. Selling your own work ethic for that type of a rate is very difficult. The market's just thin, in my opinion, at this point. My understanding is your rates would still be at least 10%, which is high, right? And the last thing I think you would want to do is be liquidated on that collateral if you can't pay the loan. So if you can pay the loan, take the loan. If you have no problems with cash flow, if you have a good job, or if you have a business and you have stable cash flow, then go for it. But I think it's very, very difficult. But this is a question I want to answer again with how this is all going to match, because Saylor still is, he's in a major arbitrage moment. Like his costs of capital are so low. Not only is the Bitcoin price low, liquidation price, but he's able to sell these instruments. Some of them I think were even zero coupon. Like investors are basically just giving him money to give them something like a Bitcoin yield, which is worse than just buying Bitcoin. He's a pretty good salesman to do that. Yeah, to pay the debt. Did I say something else? To pay the debt. Yeah, the interest on the debt. Make sure you can do that. So a couple different themes here for today, but I would say I'm very curious to see what happens when this TradFi world, gold, Apple, straight lines on log scale. What happens when they meet the Bitcoin world, which is a nice curved line on log scale. Still grows super fast, by the way, right? This black line increases at $100 a day. Doesn't mean the price is going to increase at $100 a day. Nothing's going to, if the price increased at $100 a day, it would be 100% R squared. It's not that good. So 96% R squared is pretty good. By the way, I realized I need to change this in the tooltip. This is the R squared on the trend line. Confuses people. It's not the percentile. I'll put the R squared back, or just take it away. Most people know this doesn't really change. People know that it's a 96% R squared, so I need to change that. Just trying to save real estate on the screen. The trend is your friend. Trend is your friend. I would not, I would not change. It's good to have a strategy. I would not bank on anything crazy this cycle compared to prior cycles until something changes. The 4-year cycles, just like the 4-year halving periods, have tended to hold. And so far, this one is shaking out, I'd say, more similar to this cycle, the 2013 to 2017 cycle, than the 2017 to 2021 cycle. But of course, nothing will repeat exactly. All right. Let me know if you guys have anything else. I do want to come back. Like I said, MicroStrategy, I really want to look at that now compared to Bitcoin, the actual market cap. Apple, and I do like even, we could track any stock if you want me to track a certain stock, but the trend line is the best way to, understand where we are. And for that, you need to look at first the all-time trend and then see what's the most recent trend. In Apple's case, you can clearly see it's here. It starts here. We go on a different trajectory here from the 90s. It's about 2004. So I'm going to restart that for you. We'll look at that in the future. Fundamentals, I can still draw some good charts for you, but perhaps it's easier to buy on low fundamentals, that means low multiples, which means undervalued. I think it's very difficult to sell here. I mean, why, you'd hate yourself if you sold in 2020 at split adjusted $110. Now it's double that. You wouldn't hate yourself, but you wouldn't be too happy. And then here, obviously, when the company was getting started, fundamentals don't really help at all. Some go negative, some go way positive. You have to cap them. Data is not very clean. Anybody would be happy at buying Apple at split adjusted 22 cents, 28 cents. So that's my thought on fundamentals. I just wanted to do that little video here. Probably more in the future. It's still going to be trends. But we can look at fundamentals. We can look at fundamentals of MicroStrategy as well. Look and see the valuation there compared to the Bitcoin that they have and compared to the money that they make. As for this cycle, again, I've said it many times, but we'll just look at it. I think this is the range, roughly. So let's go out to the end of this year, roughly, starting next year. $125,000 trend. I think safe to say 2x. Safe to say. Pretty safe to say 2x, 2.5x. Getting close to 3x, which is the number 6 here. Could be harder. Could be harder this time around because the data keeps getting heavier and heavier. More data points. It's harder and harder to break out on the upside, unlike these early years. And as you see, we didn't really break out on the upside in 2021. All right, guys, that's going to be it for me today. Got some other work to do. Thank you for watching. Please, not to be a broken record, but if you want to check out more on my site, still only got this one chart up, which is just the rough, power curve. You see a straight line on log scale. Got all the data here. You can support me with my BTC Pay server here. Whoops, you can't see on this share screen, but you can see it here, right there. Lightning, on-chain, whatever. Value for value, if you want. People say I need to promote that more. Usually I just like to draw charts and talk to you guys, but always appreciate the contributions. So thank you. See you tomorrow.